Hello friends, welcome back for Bitcoin Technical Analysis with me, your friend Rocky Outcrop. I should be recording myself and I should be recording the audio today, so I've double checked things this time around, so let's hope for the best. Yesterday's video would have been great, but whatever. All the best. Thanks very much for joining in here today. Thank you so much for subscribing, all that stuff. You know all about it, you've seen YouTube before, so I really do appreciate it. Let's take a look at the notes that I've got up behind me for today's show. As you can see, I've decreased the font size slightly so I can fit even more on there. And we can work through that together, but let's just take a look at the first part here, which is say take off all the drawings, look at the structure, higher highs, higher lows. Okay, so uptrend. Let's just take a look at that now then, shall we? As I say, I'm Rocky Outcrop. I do daily Bitcoin, Ethereum, Chainlink, and Tezos videos, so subscribe to the channel if you want to see any of those, and join the Discord link down below. Okay, so here's a high, here's a low, say whatever. Maybe this is a lower high, okay, but then, if we work from this point here as our initial low, and then that's the high, then that's a higher low, and then that's a higher high. And then at the minute, I suppose, is this going to be the low? But so, okay, so we have an uptrend in here in this sort of section here. If I just take the brush and go and highlight that. So that's an uptrend if we're looking at it since around about the 12th of May, fair enough, right? And let's then see, what was the next thing I was going to talk about? Look at the oscillator's apparent bearish divergence. Okay, so if I just hide all the drawings again and bring up the oscillators from down below, before I go into looking at the apparent bearish divergence, how about we start off with the with looking for hidden divergence as well? Because the only reason it's really the words hidden and visible and whatever are just misnomers. Again, subscribers know that I more or less dislike every single part of the taxonomy to do with trading. Taxonomy, by the way, is just as the posh word for jargon, and jargon's the posh word for words and crap. So I hate all the words and crap involved in trading. But let's look for hidden bearish divergence. Now there's nothing hidden about it. We can see this low here as part of this uptrend. This low, which is higher than this low, is got a lower lows on the oscillators down below. Okay, so there's hidden divergence in here, hidden bullish divergence, right? Fair enough. As after the hidden bullish divergence came in here, we saw a high coming in. So just looking back the way though, beforehand, what did we have before this low came in? Well, we had a lower high than the previous high and a low here, which I think is a bit much to say that this was the low before. I think it's a bit much to say that, but if you were to try and make that argument, then you would be saying this was a lower low and then a lower high, and then it came in and it put in a higher low anyway. So, that turnaround that happened there is some little bit questionable, although of course I would actually say this was the first low here. No, even not that. I'd say all the way back down here with somewhere here. This is just on the way up, and this movement here is just on the way up as well, to be honest with you. And this is why then you could ask the question, well, is this a low coming in now, or is this just on the way up, or on the way down, or whatever in between times? So moving on then to the sort of the visible divergence. Here is the high, and then here's a higher high. And just looking on the oscillators down below, let's just start off on the ADX. Well, if this is the high here, let's just double check the dates. Looking at around about, say, the 19th of May for that high. Let's just look at the 19th of May here. So in around this peak here, then you could say that actually, this peak here on the 17th, 18th, 19th is actually lower than the previous one here. So that's not divergent. You could make that claim, but that's on the way down here. Instead, you've got this peak here on the 14th of May. Let's just have a look here. So the 14th of May coming in around this area. So just in general, between this general area and this general area of the recent highs, maybe you could make the divergence. It does appear to have divergence between these last two highs. Really, it does appear to on the DMI, although you could try and split hairs about it and say, well, maybe not, maybe this was the high. Let's just try and split that hair just now, shall we? No, this was higher than over here. Yep, this was just this closed ever so slightly lower than this area here. It's certainly on Coinbase anyway, at this particular chart. It looks like it was just fractionally higher, in which case there's no point splitting hairs about it. That looks like it's bearish divergence. Let's do the same thing over here in the stochastics. Well, that made the job much easier for us. This area versus this area. Well, this is lower than this area. Let's look, this is higher than this area. Okay. And then here in the RSI, well, it's the same sort of question. We're talking like the 19th of May, or is it the 14th of May sort of time? Well, let's just go with the 14th of May like we did before initially on the DMI and say, well, this is higher than this here. So that would be quite obvious sort of bearish divergence. But then maybe you want to make the argument about whether or not this is actually in here at the 19th of May. You know, again, maybe you're looking to try and say, hey, look, you know, we avoided bearish divergence as a result of that. I'm not going to say so. I'm going to say that this is bearishly divergent between these two highs just here. You know, now if you want to be more sort of cruel with the pricing and go back a little bit further and compare it to this high over here, which is actually higher than this one and is more like the previous high, given that this was lower than the price action on the 8th of May, then you can quite clearly see at this point that the divergence is, you know, it's stark. You know, they've got this coming up here to the overbought zone just about, and then recently we couldn't actually make it into the bearish control zone. And the same sort of thing applies here, really, where you can just more or less draw a downward sloping trend line here on this thing. Must have drawn that other one on a different time frame, so I'll just remove that for now anyhow. And you can see that. So like we have that on the go at the minute. You know, is that something to be aware of? Overall, the shape of this thing, I suppose, could also just be considered to be a channel towards the downside here on the stochastics, depending on, of course, on how you draw this in. You could have maybe have had this position before as like a fallen wedge, of course, you know, or even like this. I suppose you could still have it as some sort of wedge, you know, if you wanted to, or indeed you could look at it like a channel. It's not an exact science, like we say. Let's leave it like this for now as a fallen wedge, since that's slightly bullish and the price action has got this higher high or whatever, and we already know that it's bearishly divergent on here anyhow, so we don't need to sort of be too strict with that. I wonder why none of these fit. I must have done them on a very different timeline to the 24-hour. Same scenario here, really, you know, with the RSI. Let's call this a fallen wedge here, which is obviously a bullish pattern in terms, and you can do this, by the way, do patterns on these things. So you've got this sort of bullish pattern here versus the bearish, well, actually I'll come across the pattern chat later on, but you know, you have that as on the go. And what do we have here in terms of the strength of trend then while we're looking at this? Well, we're still below this 15 area where I look for sort of volatility spikes in around this price, and you can see we've obviously, with the price action, we've had some recently, and the blue DM positive is coming towards the negative side here. The negative is coming towards it. These are converging. Now, when I say converging, I'm not talking about bearish or bullish divergence. I'm just using the word literally. Again, that's a problem with the taxonomy and trading. These are coming closer together. Okay. Is there another word for that? No, well, converging is the best word for that. So anyway, these are coming closer together. Just had a did-a-dim noise go. I'm paranoid about where I'm not filming. Yeah, I'm still recording. Still recording up there. Okay, everything's going okay. Right, sound. So let's move on past that. What we've learned so far is that there's there's an upward trend on the chart since the 11th of May. However, it's a bearishly divergent upward trend. You know, you can split hairs about it and try and make the case that it isn't, but generally speaking, if you use either of the actual previous highs, it's bearishly divergent. If you look at this area here, then it isn't, and there is some mitigated by the fact that there's some hidden bullish divergence here on the go. So we have hidden bullish divergence as part of an overall upward trend. Maybe in a sense you could make the argument that that hidden bullish divergence as part of an upward trend is more significant than bearish divergence in terms of, you know, planning your trades potentially. But let's just move on from that now. We've done that section with the oscillators. What's next here? So look, oscillators, apparent bearish divergence. We've done that. Check. Look at drawings. Rising wedge possible. So we've got we drew the descending wedges, the falling wedges on the oscillators down below. Let's look here at the price action and say, well, how would you want to draw this in? How would you want to? Let me know in the comments. Join the Discord. Let me know if you want there as well. Would you draw in like this and say that there is an upward slope here on the bottom part using these wicks and perhaps using wicks, just exclusively using wicks, these two wicks here and this starting area? So you could say 1, 2, 3 touches. Is that how you would do it? There's other ways of looking at this as well, of course. Maybe you could be looking at this still as saying some sort of like you've got this area here, but if you were to and try and claim for a ascending broadening wedge, maybe you could try that, which would be a bearish pattern as well, just like the ascending, the convergent wedge is where the lines get closer together. If it's rising, if a wedge is rising, it's bearish. If it's falling, it's bullish. Essentially, is the chat there. But I think that of all of the different shapes to draw on here currently, this is the best. This is obviously as a result of this recent high. So if this had after the the so-called breakout from the symmetrical triangle, so you could be looking. So the biggest sort of naysayer side, argument against this fallen wedge would be that it's simply a sort of retest of the symmetrical triangle. Let's make it so it looks like a retest. If you follow along with the channel, subscribe again, then you know that we talk about the subjective nature of these things and the Gestalt nature and human psychology and all sorts of stuff, all sorts of really great stuff. So you know how this can all shape up, and you could say then, look, we've got this touch in here. It's not breaking the bodies of the candles. It comes down here. This is where the breakout kind of started happening. We had some sort of volume coming in here with this, so to indicate that maybe a breakout is real, and then we've come back down subsequently and retested it. Okay, that's what you could be saying, and that you're still hoping for a move all the way up to 11,500, call it, just for the chat. Now that's that side of things, and that's the bullish side of things. Now that's okay, and that's totally a valid argument, and there isn't any right or wrong answers really in this. There's only your account. That your account is the right or the wrong answer at the end of the day, regardless of what you believe. If you're making money doing it, then who cares, and whatever. So, but those are the two different ways of looking at that, right? But there's a rising wedge is quite possible on here, and I think that's what I'm going to stick with in terms of this overall. Now let's look at the fibs, and we'll rearrange the one that's just here so that it actually lines up properly. So if I go down here and just double check with the bottom of this thing and put it in body to body, so like we can see here using a crosshair serrated line. Oops, sorry. That's why it didn't line up before, because the volume candles were hiding it. So yeah, so there, and then it lines up with the zero, the one, the starting point here lines up with the bottoms of these bodies coming in at 13th of March. Let's just use it body to body for now. And give me the top side of this, please, and put this in body to body at the top then. And so that's where the top's lining up at. Where does the 236 come in at? Well, the 236 comes in at 8953. So, providing that the prices stay above there, this Fibonacci retracement, it remains invalid. Okay, let's adjust this again slightly just so that we can look at it with a comparison using the wicks, going wick to wick instead, and then we can get a better idea perhaps of where the 236 comes in at 8877. So let's just go for a sort of an in-between number and call it 8,900 then, just to make things easier on ourselves. And if we look at 8,900 anyway as in terms of just the horizontals and whatever, just to take all the drawings off in fact and look around 8,900, how does it look? Well, 9,000 area, 8,900, we had wicks coming in here, there's a lot of volatility. The doji candles appear mostly in around those areas of those prices. So yeah, okay, let's just go with that and say 8,900 for argument's sake. So there we go. There's a target for us in terms of if the prices come down, then going down below that would potentially be bad, and you'd be looking from a Fibonacci trading point of view. Now, this isn't a prescription. This is just talking about things, but you can trade whatever way you like yourself. Let me just move this over a bit. so that it's actually visible for you. Yeah, you're looking at 236, break down below that 8,950. Then you could be looking down to the 382, the 50, and the 618 in terms of 3 profit taking targets thereafter. That'd be 8,167. So let's just call it 8,200. This 0.5 is at 7,534 here. Let's just call that 7,500, shall we? And the 618 is at 6,901. So let's just call that 6,901, shall we? So we can stick this up on the chart for now and just say that in text format, so that you don't need to have me, you don't need to go thinking, oh, what was he talking about? We'll call it 8,950. Or did we say 8,900 or whatever? I've typed it in there, so that's what we're calling it. We're calling it 8,200, and then what is it then? No, 7,500, 7,500, and then 6,900, right? That's what we'll call it for the 3 downside targets, should we break below 8,950. So let's call it, let's just say, should we break below 8,950, then 3 downside targets become those 3 there. Okie dokie. So we have that on the chart. That makes things really nice and simple for everybody watching along. Hope you're enjoying the video out there. I know this is lasting quite a while. I really prefer it if it wasn't lasting quite a while, to be honest with you, but over time I'm working towards becoming more and more succinct. But I want to get all of the detail out there for everybody so that you can all learn and everything and appreciate that. And once we move past thousands of subscribers and there's too many comments to read down below and everything else, it all becomes too difficult. Then at that point, maybe I'll change my sort of stance on that. But at the minute, I'm still trying to keep things as complete as possible. Right. So we've rearranged the fib and we've looked with it at the recent high, body to body and wick to wick, and we've chosen a few numbers here to put to have downside targets, just so we can be aware of them for managing our risk. Should we break below certain targets, then we know where the prices could go. Of course, 6,900 being so far away from 9,500, you're looking at a near enough 20 to 30% drop in price there to get down as far as those targets. Quite significant. Reminder here, time for a reminder. The trend is your friend until the end of the trend. Okay, so the trend is your friend until the end of the trend. Bearing in mind that the trend really, in terms of this upward movement, could be looked at from the 11th of May and saying that it's going up the way, or you could look at it as having been this, overall this entire upward trend here since March, and just kind of ignore the fact that there was a bit of a downtrend in between times, and then it kept going up the way, and just say this is your high, etc., on the way. So the trend is your friend until the end of the trend. And we can also look to a couple other things real quick here. For instance, how the prices are sitting above, the 21 EMA, which is moving towards the top side with a nice slope towards the upside on it, then that the 55 is here on this as well, is below the 21, and they're both sloped towards the top side. So there's, you could say that there's a good strong indicator of trend currently. We're above the 50 moving simple average here on the weekly time frame as well, and those are strong indicators that we're in an upward trend. Now, if I just bring the price action back onto screen though, I would like to throw out a question to you and say, is this really an upward trend here? If you have these 2 white lines I'm just drawing in right now, just look at that white line there and that white line there, and I'll hide them again and say, is this really an upward trend, or is this a lower high than here, which is a lower high than here, and is this a lower low, and a lower low? You could say, in fact, that we've been very much and distinctly in a downward trend since June 2019, and that would be an absolutely valid thing to say. So we're not actually able to say that that's confirmed yet. The first step towards doing so would be to see opens and closes, and actual decent opens and closes above 10,200. Now, with recent experience in mind, I think I'd like to point out to people who are trading out there that recent experience in mind, the prices can very much come up as high as 10,200, for example, and then come straight back down again. And that's literally what just happened. So let's just bear that in mind. Now go back over here and look at the notes again and see where we are with this so far. Okay, I hope you're enjoying this episode. I hope you're finding that it's full of good information for you. Please, again, as well, let me know in the comments down below if there's something you'd like me to be doing differently, if you think this is the way for you. Reminder, right? 9,555 is a key level. Oh, look, we're here again right now. Lol. Unfortunately, we're not right on that price. I was kind of hoping that the timings would work out that way. Started off the episode at that price, whatever. I think we did anyway. It was that price when I was writing the notes. Anyway, this is a key level. We're clearly right in amongst this, and let's just stretch it back out yet again and take a look at the price action and say, hey, is it not very obvious that this is a key level here at this blue serrated line here at the 9,555, just for argument's sake, let's call it that. We're ever so slightly above it now. We were below it earlier on when we came down quite close to 21 EMA. I think you could easily make the argument that if you break down below the 9,300 area, that you could be looking down to the 9,000 area here, and the 9,000 area obviously being quite key, because this is where this upward sloping rising wedge lower support line is at, and also where our previous support is as well. We spoke about quite a lot at the time about the 8,000, about 9,000, just at that 9,000 level. So breaking down below there and going an additional 50 or 100 bucks and closing down there would be your sort of your big warning sign for you. Closing above that would be okay, be part of the structure, and that'd be fair enough, and you could be bullish for a rise up again to the 10,000 area, certainly towards 9,500, I suppose. Breaking down below this area as well, 236, and that, you could sort of kind of fake out below this, sort of, fake out down here, and you can look quite easily to the previous high, or low, sorry, here. It's 8,700 or potentially 8,575, for instance, as your fake out zone. So if I just put a sort of squiggly line in here and just say, you've got fake out zone in this territory here to be aware of. Okay, now let's go back to the chart, to the notes again. Okay, so cool. Well, we're getting through this. I know it's been over 20 minutes already, but we're getting through this. Reminder: previous highs are higher than these ones. So what does it look like on the bigger? Oh, cool. We've done this. Check. Basically went through all that there a minute ago with looking at it on the weekly. Comparison, high time frame weekly. Okay, yeah, on Ethereum. So we talked recently about the sort of the way that you can look between Ethereum and Bitcoin and try and see if one's leading the other, if there's any insights that you could possibly have. And if we just take off all of the drawings and everything else, then I think it's quite distinct here on this chart. What is this one again? BitMEX. That BitMEX, since it opened up really on the August 18 for BitMEX, all you've really had in the weekly has been this sort of downward trend here, looking at the highs at least anyway, with a high here, a lower high here, a lower high here, and a lower high again. And on the weekly sort of point of view for Ethereum, you'd need to see it close on a Sunday night out and opening back up on a Monday up here above the 275 area to 280 and sustaining itself up there for a week, so that you could see that it's actually turned that around and has not got this downward trend. And it's very distinct here as well. It's just a downward channel. If I just take the drawings out again, I'm sorry, they're going to all appear back on the charts, but do another 2 white lines so that you can see, just for the context here, as we're talking about the Bitcoin prices, and you can see very much this distinct channel. It's had wicks coming down and touching it and everything. It's all on the go here, and you could expect perhaps the prices of Ethereum to come up to that 256 area and then turn around again. And of course, people will get very FOMO-tastic on the way up towards there if that were to be happening, and you could see a lot of liquidity being brought into the market from the retail side of things, so that the big fish whales can chew it all up and take the money off of you if you're just getting out of position there. So watch out for that happening. Right, great. So that's that. Look at that. We've done the comparison with Ethereum. Yes, the daily is an uptrend. This is, however, dangerous thinking. So I was kind of covering that there now. This is dangerous thinking to say that this is on the daily time frame, as we talk about it on the weekly. Just still on the weekly. That to say that there's a daily trend towards the upside is dangerous thinking. Looking at the wicks here, looking at the general shape of this, how in terms of the weekly time frames, right on in that we're still within this symmetrical triangle shape here of this weekly, you know, still within that, still got time to go. There's certain people out there who, you know, from the traditional world who like to talk about breakouts as having been, you know, moving 3% up above the previous target. So 9,600 up to 10,000, you've moved more than 3% up there. And then you come back in. So there was a breakout, then you're going to go for a recompletion. They would say that was a completion of the pattern when we moved 3% up, not the breakout, sorry. This pattern, the symmetrical pattern, would have been completed by a 3% move up. And then you go for a recompletion if you're to think about it that way. Now, that's not personally how I think about it, but I was talking to somebody on Twitter about that yesterday, so I thought I'd throw that out there. By the way, if you want to follow me on Twitter, it's Rocky_Outcrop. Okay, so, you know, it's dangerous thinking to think that we're in a daily uptrend, you know, in terms of just, you know, taking positions and trading based off the trend alone. Although there are various things that you can look to, for instance, you know, here in the weekly where you'd say this, you know, actually, if we just include just, you know, just the price action since you know, that price action, then you could be like, you know, that's all very bullish looking. Okay, so but it's dangerous. You know, there's a temptation there, which maybe, you know, is easy to make you overlook certain things. Question. Could this be the lows, or is that a bit rich to say so? Perhaps it is. Perhaps the local higher low could come in somewhere lower. So going back to the 24-hour time frame, obviously, we've touched on this already as we were looking and saying, you know, is this really the low here? Is this a low? Have we come up and put in a local high? And then could you say we've got a local low now and we can go up and put in yet another local high? Is that a bit much to say that in this area right here? I would tend to say that it is. I would tend to say so. If that's the case, then that kind of makes it seem like this isn't really the local high, that this is part of the one movement. Maybe there's more to come. And in the face of that bearish divergence, it's kind of hard to think along those lines. Instead, I'd like to see another higher low coming in, perhaps a more hidden bullish divergence, perhaps on that higher low, for you to be able to think that things are turning around. So could we think that the prices are coming down here towards this area? Sure, we could. But obviously, the first place for the prices to go past on the way, 9555, and the 21 EMA on the daily at 9,350, let's call it, you know, for the first two sort of question mark areas there, which, you know, it could trade like this for a number of days, even in this area. If it comes down towards this area at 9,000, you know, then like we spoke about, this could be where the higher low comes in at, and that would make more sense if you look back at the previous higher lows in terms of just, you know, their distribution here on in terms of the willingness in the market for it to move a certain proportion, you know, it actually extends beyond this, you know, in terms of the willingness or the elasticity, you could say, it actually goes as far down as that 9,000 area, where people are more than happy to remain bullish on this market right up until those points there. In fact, you know, like I was saying, in this general fake out territory here where we've got this oscillating line at. So I just want to throw that out there as information. But of course, you know, we could turn around from here. It could just keep going up. You know, it could do. And for the same token, you know, the same talk about that. You know, you're looking first off to, can we get above that 9,650 area? Go in, then continue on up, and you'll get higher than 9,800, 9,900. Should prices open and close a, you know, a decent sized time frame above 9,800, you could be looking again for the 10,000s. Overall, you know, that could all be happening in amongst this, and that might be, you know, another turnaround time. Of course, then towards the top side, 9,350, 9,400, you need to actually break on beyond this area here, you know, in a significant way first off, or else it's just more of the same. So, yep. Question, could it be, so that question, I think we've answered that question now. Danger. If the higher low is outside the rising wedge, that's a bit of a problem. If it is below the 236, that's another problem. So first off, if it comes down here and the higher low comes in, and the higher low comes in at say 9,000, and it happens on say the 10th of June, for example, you know, in terms of time frame and the movements here and whatever else, then, you know, that's a problem. If it's 9,000 even down here on the 4th of June, the 5th of June, that's a problem still. But, you know, and it becomes more apparent the longer it takes for that to happen. So you'd want this to happen, if it were to happen, fairly quickly, and then to, you know, be 9,000 or higher. If it happens fairly slowly, you want it to be, you know, above 9,200. But of course, like we spoke about with the fake outs, you know, anything could happen in there. Generally speaking, it becomes easier to just talk about the 8,950 area. But, you know, it's a bit of a problem. If it's below that support, that's another problem. So those two things we just spoke about, you know, a confluence of problems, if you will. And but still, it could be higher, because what we need to remember as well is that the fake out territory, it could still all the way come down here to be higher than 8,750 and then continue to go towards the top side, and we could just consider that to be sort of like a fake out or something along those lines, right? But still it could be a higher low. So if it came all the way down here, it could still just be a higher low, and then you would be able to just talk about it in this sense, without the moving averages, without the drawings on there, just talk about it normally and look at it and say, look, we're above the 55 moving average, above the 50, we're just retested the 50 post golden cross, all that sort of stuff, and say that this was a healthy, natural part of the oscillators resetting and coming down here because we've experienced bearish divergence and we want to continue to go towards the top side, but we needed to have a deeper but yet still higher low and test these moving averages in order to move up without without significant bearish divergence. Actually, just while we've got these off the screen, I'm going to all the drawings off the screen, I'm going to change this over to 70 and 280, just to give everybody a reminder that because of the recent price action, that if it were to do that same thing, then you'd be talking about it from the point of view of touching the 200 on the CMEs. That's where the 200 would be on the CME chart, okay, and or touching the 50 on the CME chart. And if it did either of those things, it could negate the cross. And bearing in mind that there's only been 2 crosses since the CME's ever opened up, and if you look back at time, there's only 3 crosses since the peak here since the all-time highs. There's only ever been 3 crosses of these moving averages, as you can see quite clearly. That 1, 2, 3 crosses of these moving averages, since the all-time high. So just to bear that in mind, and also bear in mind the fact that when this cross happened and everything else that we had, price action that was extended quite sideways for quite a while before you had further breakdowns, but we had the coronavirus pandemic come in here, and it's changing a lot of people's perceptions about things and creating FOMO in the market, because we've had such significant drop-offs that you could say that there's been a correction prematurely, sooner than it otherwise would have happened, to the extent that maybe perhaps this happened overall. And this is the question that we're trying to discover here overall. But if this does drop, if the prices do drop down to 8,219 before the 10th of June and then continue down the way, that would definitely, almost certainly, undo the prospects of this being a golden cross. And indeed, when these things cross, they quite often, there's a volatility in around those areas, and they could often just uncross back the way as well. But I'm going to go back to 50 and 200 now, and again, just subscribe if you want to know the reasons behind doing these things. I can't explain everything in every single episode. This episode is already 30 minutes long, and you can see I'm just constantly putting out more and more information, more detail, so I can't go any deeper than that just now. So that's all that. Alert, look for a lower low. So that's essentially it. You've got a confluence of factors in here. If there is a lower low and it goes past fake out territory, then of course you could easily be looking to the 200 simple and the 382 here at 8,200, for instance. So if you wanted to put an alert on your chart, for instance, or if you wanted to just be alert yourself or whatever, that's the number to look for there. On the upside, be aware, take profits early, and don't be greedy. Okay, so as we saw here, this is the danger of being greedy. Some people in the world will have talked about things like 10,500, etc., etc. That's my target, 10,500, yada yada. You could have taken the profits just a little bit earlier there, 10,300, 200, 400, whatever. I'm not a financial advisor. None of this is financial advice, of course, at all. But you just have to be aware of that, because if you're taking profits a little bit earlier, then maybe what some people or some textbooks or any of that might say, that's probably wise. Indeed, as well, looking at the measured move from the symmetrical triangle, if you'd taken profits there, you could have got back in again. If you so truly believe that it's going up, you could have just doubled your position size just purely by taking profits and then getting back in again or whatever. And all that. So don't be greedy. It's dangerous looking for positional/directional trades in this market. So right now, and you have to remember that we're consolidating in one form or another. Or we're in a pattern of one form or another. Even these patterns down below, there's still plenty of scope for this to move towards the downside and remain in these falling wedges. Just like there's plenty of scope for the prices to move towards the upside, just trying to get the oscillators to go away, trying to move towards the upside here and still have, we could come all the way up to 10,300, for instance, so there's plenty of danger here in terms of thinking beyond these levels just now, okay? There's a lot of danger in that, and so if you're looking for some sort of trade where you want to be able to show your granny how well you did come December, because, you're looking at a December contract on BitMEX and think to yourself, I want to have a lower than 10k crypto Twitter meme-tastic type mentality about things, then you're playing with fire doing that. Okay, there's chop is inbound potentially, always is. The ADX not showing a strong uptrend. Oh well, we already done that as well. We already did that as well. We're still going down below our previous lows here on the ADX. Now you don't look towards the ADX line itself for divergence or whatever, and amongst the price action, you'll be doing that on the blue or the red. Talking about the DMI and the DM negative, but just bearing this in mind, that we've got this downward slope here, and it hasn't really turned around yet despite this price action, and that we can still be in volatility territory, which I talk about as being below 15, but really if it goes down to 10 or below 10, I think that's more the traditional sort of, point of view on all of that. Okay, so how long is that? About 35 minutes. I hope that you appreciate it. I hope you enjoyed it. I hope you've stuck all the way through to the end. If you have, and you haven't hit the subscribe button yet, then go ahead and do that. I would massively appreciate it. I really, really would. If you would also be so kind as to hit the like button, that would massively help the channel. And if you also share the video with a friend, if you've got one out there, then there's nothing better out there than word of mouth recommendations, and I would massively appreciate that. I really, really would. Also, I'd like to point out the fact that a friend of yours is a friend of mine, and we're a big friendly community so far at 733 subscribers. I'm blown away by the fact we moved past 700 recently, and I just want to see if that can keep going on and continuing, because this is the sort of effort that I've always been putting in really to these videos, and I really, really do appreciate it. I just wanted to go the extra mile today because yesterday's video was a bit of a letdown, so I've done this extra long, extra clean, video with fairly dense information, and I'm not going all over the place looking at a million different types of oscillators or a million different indicators. I'm just showing you ones that integrate really well with whatever you're looking at independently. I'm not a YouTube monogamist either. You can go ahead and watch anybody else too. Really appreciate it. And if you join the Discord and chatted to us all about what you're up to as a trader individually as well, so that you can help share your experience with everybody else in the group there, I'm sure everybody would benefit from that too. So go ahead and do that, and I'll see you next time.